whenever we want to start with the cash book, for those who were not there, let me just give a background. The bank reconciliation statement, which is the BRS, is talking about reconciling. That is, we are comparing the cash book with the bank statements. Let me use BS for the bank statements. So the cash book is for the firm. Is for the firm. And the BRS is for the bank. I'm doing a little intro before I start. So when we are reconciling this and that, we only find the differences between them. That's basically what we are trying to do. So in accounting, we have what is called the double entry principle. The double entry principle. The double entry principle or the duality concept. The double entry principle or the duality concept states that for every debit, there must be a corresponding credit. Okay, so now, whenever I debit something, I must credit another. So if I debit something with 200 cedis, if I debit one account with 200, I must credit the other account with 200, so that they will balance. So in terms of the cash book, what we are going to do is that we have the cash book. Let me use CBK for the cash book. We have the bank statements. So whenever I debit the cash book, in the bank statement, it will be a credit. And whenever I credit a bank statement, in the cash book, it will be a debit. So you could see that the double entry rule is reflecting here and it's also reflecting there. So in terms of the cash book, it is debit and credit. In the bank statement, we are having credit and debit. So whenever I debit the cash book, I will have to credit the bank statement. So if I'm to have a T account like this, and I'm having a cash book here, and I have the bank statement there, in all accounts, we have the left side being the debits, left side being the debits, then the credits and the credits. So if I should debit the cash book with 50 cedis, I'll go and credit the bank statement with the 50 cedis. If I should credit the cash book with 10 cedis, I will debit the bank statement with 10 cedis. Are we okay? Hello, are we okay? Hello,
Sir.
Yes, yes.
are we
Hello.
okay?
No, sir, you were saying something like whenever you credit the cash book, you will debit the bank statement, right?
Yeah.
Okay. Okay.
So
Thank
do you
you.
understand me so far? With
Yeah.
with the
I
explanation I've
can.
given, are you guys okay?
Yes, sir.
Hello, with the explanation I've given, do you understand it?
Yeah, we understand.
Okay, so that's it. So whenever I debit the cash book, the CBK stands for cash book. Whenever I debit the cash book, I will credit the bank statement. Whenever I credit the bank statement, I will debit the cash book. Let me explain it further so for bank reconciliation statement, which is the BRS, it is mostly used by companies or entities which have current accounts. When in banking, when we say current account, it means that this account, they can issue check. When a company has a savings account, they can't use bank reconciliation statement unless they have a current account. On a current account or the current account, the business can write up a check. Are you getting it? So in the cash book, whenever money, so if I have here as my cash book, I have a T account like this, city sign. Whenever money is coming into the business will record it in its cash book. So assuming customer A brings 100 cedis check, right? Customer A brings a check of 100 cedis to the business. What will the business do to the 100 cedis check? The business has not received a cash amount, but the business has received 100 cedis check. So what the business will do is it will take the 100 cedis to the bank. And so in the bank, there's a bank. In the bank statement, the business has a debit here and has a credit here. That's how the bank statement looks like. So if the business who received 100 cedis from customer A check, a check of 100 cedis from customer A, it will send the check of 100 to the bank. And in the bank, it will be in their bank statement. And the bank will visit the customer's account with the bank, right? And then, assuming the business had a balance here, a balance right there. So balance. So let's say opening balance, it was 40. So the business sent the check from customer A, which was 100, right? The 100 cedis, when this business sends that check to the bank will credit it to the business's account. So the closing balance will become 100 plus 4 to give us 140. So in the bank's books, whenever they credit, it means that they are increasing the money of the business in the account. Whenever they are debiting, it means they are decreasing. So when the business receives 100 cedis from customer A as a check, it will take you to the bank. The business will record it as a debit because the money is coming into the business. So on the debit side, when the business records it as the debit side, it will take the money to the bank and the bank will credit it. That's what I'm saying. Whenever you debit the cash book, what do you do to the bank statement? You credit it. You credit it. Because when you receive the money, the business will record it in its book, in the cash book as a debit. But when it takes it to the bank will credit it. So the double entry has been verified, or the double entry has been confirmed that in the cash book, C, we debit. In the bank statement, we credit. Do we understand it? Do we understand it?
Yes, sir.
Okay. If you don't understand it, you prompt me. So assuming the business also gives a check to supplier A, and that check was 50 cedis to supplier A, a check. The supplier needs cash, right? Here we are working in the books of the business, not in the books of the supplier. So if the business gives out a check of 50 cedis to the supplier also take the check, assuming the check is for Access Bank. The business's bankers or the business bankers is Access Bank, and he writes a check on Access Bank check booklet to custom supplier A. Supplier A will take the check to Access Bank, and when he takes the check to Access Bank, because the business is paying the supplier A, the business will have to take the 50 cedis from the balance of the business's account with the bank. So when the bank is going to take the 50 cedis out of the business's account, we say it is going to debit it. That is to deduct it, right? So if a business deducts 50 cedis from the account, we are going to be left with 90 cedis as a balance. Because whenever the business debits the account, it means they are deducting, debit, deduct, debit, deduct. So whenever the business is the bank is debiting the account, it means it's deducting, it's reducing the money. Whenever the bank is crediting, it means it is increasing the money, it is adding more money. So here, because the business issued at a check and in the cash book, whenever money is going out from the cash book, it is on the credit side. Whenever money is coming in the cash book, it is on the debit side. So because the business is giving out money, 50 cedis out, it will go to the credit side. But when it gets to the bank, what will the bank do to the 50 cedis? It will debit it. Do you understand it?
Yes, sir.
Therefore, I told you that from here, cash book, when we debit the cash book, when money comes to the cash book and you debit it, when it goes to the bank statement, they will credit it. When you credit the cash book on the right hand side, when it goes to the bank statement, they will debit it. Do we understand it? Hello, do you understand it?
Yes, sir.
Hey, How many people are on the page? Do we all understand it?
Yes.
Yes, sir.
Okay. I'm building the block so that you all can understand before we start solving the questions. All right. So I'm going to give another explanation before we start solving the questions. I'll see whether I can solve one or two questions with you. Now, another thing is this. Which books are we reconciling? We are reconciling the cash book with the bank statement. Reconciling, we mean that we are trying to find the differences and similarities between the cash and the bank statement. Reconciling the cash book bank statement. And don't forget, the cash book is for the business. The bank statement is for the bank. So during reconciliation, when we find out that the errors or issues are with the cash book, it means we are going to use the adjusted cash book to correct it. So adjusted cash book, adjusted CBK. When the errors are with the cash book, we are going to use the adjusted cash book to correct it. When the errors are with the bank statements, we are going to use the bank reconciliation statement. Correct it.
So, sir, take
So
it again. When errors are in the cash book, we use adjusted cash book. What?
to correct it.
Adjusted cash book to
When
correct it.
when I mean errors, when the issue has to do with the cash book, let's say we are reconciling. Reconciliation means we are comparing figures in the cash book with figures in the bank statement. So if we realize that there were some re-entries, there were some transactions in the bank statement, but they were not in the cash book, it means that the issue or the error has to do with the cash book because they are in the bank statement. Why are they not in the cash book? So for us to correct the reason why, or for us to correct why the transactions in the bank statement are not in the cash book, we use the adjusted cash book to correct. So in other words, we will not correct them in the original cash book. We will rather use the adjusted cash book to correct it. So
So,
uh
the other one, when there's error with the bank statement, we use what?
so
What to
when
call?
so when we are as we are comparing or we are reconciling the cash book statement, and we realize that there are some transactions in the cash book, but they've not selected bank statement, then the issue or the error has to do with the bank statement because those transactions in the cash book are not in the bank statement. Therefore, as the issues has to do with the bank statement, we will use the bank reconciliation statement to correct those issues which were not in the bank statement or to correct those errors were in the bank statement.
So we use bank reconciliation.
We use bank
Um,
reconciliation
bank.
statements to correct errors or issues with the bank statements. We use
Okay.
adjusted cash book to correct errors or issue with the cash book. So,
Okay.
assuming I'm comparing the cash book and the bank statement, I find out that there was some errors in the bank statement. I cannot correct it in the bank statement because the bank has given me the bank statement, so I cannot correct it. So I have to open another book, and that book's name will be called, or I have to prepare another statement. That statement is called bank reconciliation statement. And the issues with the bank statement, original bank statement, I'll correct those errors in the statement of the bank reconciliation or the bank reconciliation statement. If the cash book, the errors are in the cash book, the business has already closed the cash book, right? So we cannot go back into the cash book and record them. It will change a lot of figures. So what we have to do is that we will open another adjusted cash book. And the adjusted cash book's duty and sole responsibility is to correct the errors in the cash book or the issues with the cash book. Are we all okay? Are we all okay?
Yes, sir.
I don't want to go forward straight and solve the question. That's what I'm explaining. So therefore, we come. What entries go into the adjusted cash book? What entries go into the adjusted cash book? So we have one. We can always have balance brought down. Then we
That's
can also have
the
balance brought.
that's the opening balance, right?
Okay, I'll explain. We can have, let's say, balance brought forward. Balance brought forward. Balance brought forward.
Things will be necessary. That kind of thing within short time. It will can every amount.
We can have, please mute yourself, mute yourself,
It's a very
mute
Sir,
nice.
please can
yourself.
you calm down small? We are copying the thing.
Are you writing?
Yeah, we are writing.
Oh, the gentleman who is making noise, mute yourself.
Cannot bend me what I'm saying. Maybe NBA
Hold on.
for your movie be akwa and from Rapim Sign TV and Apple so. Prekese TV so Rafu said medicine kwa danda nya yade
Okay,
eso
TV.
mo.
Maybe.
I actually be nice hour. Yade eso so na many no say that here Dr. James amwa help you can tell for no kuma na now this do cement.
I want to make one of you the host. So that whilst I'm teaching, if anyone is misbehaving, you just mute the person. So who will be the host for me? Co-host. Jessica. Jessica.
Yes, sir.
You'll be my co-host, okay?
Yes, sir. I've heard.
Jessica.
Yes, sir.
You'll be my co-host.
Okay, sir.
Anyone, when you see anyone disturbing, just go and look at the person in the participants and mute the fellow for me whilst I'm teaching.
Okay, sir.
Are you getting?
Yes, sir.
All right. So whenever someone is making, just go and check for me
Yes,
and mute
sir.
the person for me.
All right, sir.
All right. So have you guys finished writing? Have you finished writing? Oh, have you finished writing? Have you finished writing? Hey, okay. So adjusted cash book, right? We first start with balance brought forward. Then which monies can be or which transactions can be in the bank statements will not be in the adjusted cash book. You can have dividends. That's when the business is receiving dividends, their investments. It will only be in the bank statement. And in the bank statement, it will be on the credit side. So if in the bank statement, the dividends, because the dividends are to increase, the dividends are to increase the business's cash flow, or the dividends are to increase the business's balance, right? Dividends are like interest on investments. So if the business receives dividends, the bank will credit it in the bank statement. And what is the double entry? If the bank, Jessica, go and mute that person. If the bank will credit it, if the bank will credit the bank statement, what would we do to the cash book?
I guess.
Double entry. If the bank will credit the company's account with a dividend to increase the company's money the company's account balance, how will we record it? Which side of the account will we record it in the adjusted cash book? On the debit side. So the bank, like I said, whenever in the cash book, we debit it. In the bank statement, it is credited. Whenever in the bank statement, it is debited. In the cash book, it is credited. So the dividend, the bank will credit the dividend amount, right, to the company's account. So if the bank statement, in the bank will credit it and it will reflect on the bank statement. In the cash book, we record it on the debit side. Are we okay?
Yes, sir.
Yes,
Please
sir.
pay attention. Pay attention. This one, you don't know where after your national service you would be. You'll be needing this. It's still in use by organizations. Sometimes they call them reconciliation officers. Their only duties to reconcile cash book with bank statement, prepare adjusted cash book, state the variances, and send report to their supervisors. So it's still in use. Okay, so we have dividends here. We can have interest received. Interest received. Interest received is saying that the bank will credit the interest, right? Interest to the account. If the bank credits it in the adjusted cash book, it will be debited, the double entry. We can also have direct deposits. Somebody can go to the bank and deposit into the business's account, like pay a check into the business account, a customer. When the person pays the check in the bank statement, they will credit it, but the bank will credit it and it will reflect on the bank statement. When the bank credits it there in the cash book, it will be debited. Also, we can have credit transfer. Credit transfer. Credit transfer is like interbank transfer. Someone can send money from his Momo wallet or from his bank account electronically into the business account. That one, it is a direct transfer or a credit transfer. For that also, in the statement, it will reflect as crediting because someone was adding more money to the business account. That is what is called crediting, right? So if in the bank statement it was credited, in the adjusted cash book, the double entry, it will be debited. Double entry is saying that for every debit, there must be a corresponding credit. So when you debit one side, you have to credit the other side. So if in the bank statement it is credited there, which will increase the money of the business, then in the cash book, it will be debited. Are we okay?
Yes, sir.
Yes, sir.
Are we okay?
Yes,
Yes,
sir.
sir.
All right, let's move on. So credit transfer, we can also have overstatement. Overstatement is saying that sometimes the money will be we can record more than we earned. So if a customer brought, let's say, 500 cedis, the reconciliation officer can record it as 600. It is an overstatement. We have to deal with it. There can also be understatement. So you can write understatement in full. There can also be other errors. Okay, there can also be other errors which can be recorded there. So there can be errors. Then we will go with, now on the balance brought forward on the debit and credit side, I'll explain it when we start. Now, okay, let me do it right now. The balance brought forward on the debit side, if the original cash, remember that I said there is an original cash book and there is an original bank statement. So when we are reconciling both the original cash book and the bank statement, and the error or issues has to do with the cash book, we use the adjusted cash book. So when we are preparing the adjusted cash book, we begin with where the balance brought down in the old cash book or in the original cash book. So assuming in the original cash book, the balance brought down was on the debit side in the old cash book, original cash book, balance brought forward on the debit side, so that the balance brought down in the original cash book will be the same as the adjusted cash book. So let me do an illustration here. So that you guys can see it. Let me do it here. So let's assume that this is the original cash book. right? Original cash book. So CD sign here, CD sign there. And there were entries. There were entries here. So at the end of the year or at the end of the month, the balance brought down went to the debit side. So here will be balance carried down. Let's say 50. Balance carried down 50. Balance carried down, let's say 50. Right? Then we will come and record on the opposite side, balance brought down. That is also what? 50. So I'll just copy the balance carried down 50 to make it balance brought down 50. So when I'm preparing the adjusted cash book, so I'm using ABC cash book, AB cash book. So when I'm preparing the adjusted cash book, let's say adjusted cash book. Because in the original cash book, the balance brought down was on the debit side. When I come to adjusted cash book, I write balance brought forward. I also put it on the debit side. So you could see this is debit, this is also debit side. Assuming the balance carried down, I'm using red. Look at the original cash book. Balance carried down was 70. Balance carried down was 70. Balance, so the balance brought down will also be 70. This 70 is called overdraft. So when because on the credit side, so when I'm preparing the adjusted cash book, I also write balance brought forward. So B brought forward. What? 70, because on the credit side. Do you understand?
Yes, sir.
Do we understand?
Yes, sir.
Oh, only one person understands it. Okay.
Yes, sir.
So it means that the balance brought forward could be on the debit side. Also, it could be on the credit side. That's what I've just explained. So we will see, and then later in the week, I can also solve another question. I have a meeting with some people at 6:30. All right. So balance brought forward. This balance brought forward, we are going to record which reflects on the debit side of the bank statement, but they are not in the original cash book. So because they are not in the original cash book, we record them on the credit side of the adjusted cash book. What are some of the things? We also learned that all items on the debit side, they are all debits, or they are all deductions. So what can the business deduct, or what can the bank deduct, which is in favor of the business? The bank can deduct standing orders. What are standing orders? They are in check or regular payments on its behalf. So for example, if the business has a contract with a supplier, and it has to pay money to the supplier every month, right? So the business will instruct the bank that pay my supplier every month 10,000 cedis. So every month on a stated or specific date, the bank will reduce or take the money out of the business's account and pay the supplier. So when the bank is taking money from the business account, we say it is deducted, it is debit.
So sir, like
Right.
what you are trying, please, sir, what you are trying to say is that it's just like if you have your own company, you can give a bank instruction that every month they should pay your workers like 2,000 Ghana cedis monthly, right?
Exactly. And that 2,000 cedis, they will deduct it from your account, your business account. So when the business is deducting money from when the bank is deducting money from your business account with the bank is deducting, the bank is debiting. So if the bank is debiting your account, what is the double entry rule? Whenever there is a debit, there must be a credit somewhere. So in the bank statement, they are debiting. So in the cash book, you credit it. Are we getting it?
Yes, sir.
Yes,
Okay.
sir.
So that's it. Now, down also there could be bank charges. Bank charges, the bank will deduct it from the business account with it. So bank charges. Bank charges. Be bank charges. There could also be, let's say, loan. Let's say loan interest. If the business is paying a loan, right? Every time it can also instruct you to debit the account. So you are paying a loan, the interest on your loan. They will deduct your account and pay the interest. Okay. There could also be what is called overstatement. Just as it's on the left hand side, there could be overstatements, then you correct it. There could be understatements. Understatement means that the figure is below the original amount or what it's supposed to be. There could also be errors. You correct it. Then there could also be what is called dishonored check. Dishonored check. The dishonored check refers to checks which the banks refuse to accept. So when the bank doesn't accept your check, it means they've dishonored it. So dishonored check. Now this dishonored check on the credit side, it is a check which is for the customer. And there could also be a dishonored check on the debit side. There could also be a dishonored check on the debit side. So there could also be a dishonored check here. So dishonored check. Okay. I'll explain both of them. There's dishonored check here. It will be from the supplier. So let me explain the dishonored check of the supplier. A supplier brings a check. Let me say this is your cash book. A supplier brings a check of 50 cedis. So, sorry, a customer brings a check of, hold on. Let me explain the supplier concept first. $50. You give a supplier a check of $50. Then this supplier takes your check of $50 to the bank. And when the supplier took the check to the bank says that you don't have sufficient balance to pay him, the supplier, the $50. What will the bank do to the check? The supplier give the check to the bank, and the bank says that when they check your business account, they realize that your balance there is not sufficient to pay the $50. So what will the business do to what will the bank do to the check they took from the supplier?
They will give it back to the
Yes.
supplier.
They will return
They
the
will give
check.
it
They
back
will
to the
return the
supplier.
check.
You're rejecting.
Yeah, they will return the check to the supplier who is still at the counter in the bank that, hey, your check, the check the person gave you, it doesn't have sufficient balance to pay, so take back the check. And when the supplier also takes back the check, so in the original cash book, the supplier has, the business has given out money. And when money is leaving the cash book, it is on the credit side, it is going out. And the supplier is also taking the check to the bank. The bank has rejected the check. That is, they have dishonored the check. So they'll give it back to the supplier. And the supplier will bring back the check to the business and tell the business that, hey, this check you gave me, they said you don't have balance, so take back your check. So when the business,
But
it might not be the
excuse
same
sir,
day. So when the,
excuse.
yes, sir.
But so I'm sure what you are saying, banks don't say, like they don't talk to customers, like they won't tell them that there's no balance in their business account or something like that. They will just return the check.
Yeah. They will call the business,
Return to
the
the
one who signed the
they
check.
can say that return to the owner or something like that.
Yeah, return it to the owner. So they'll give it back to the supplier. It means they've dishonored it. In other words, they didn't give the money to the supplier. So the supplier will take back the check. And then he will bring it back to the business that, hey, your check you gave me, they didn't give me the money. Right? So when in the original cash book, they've already recorded that they're going to have the supplier 50 cedis. But when the supplier went, the check has been dishonored or rejected. So the error here is with the adjusted cash book because the check was not honored. So in the adjusted cash book, When the supplier is bringing the money, the check back, they will now record it in the adjusted cash book from where? Supplier A. What's the amount? 550 cedis. So what it means is that still the business is owing the supplier is 50 cedis because the check wasn't honored, accepted, or paid by the bank. So you could see that this check A is called dishonored check. And this dishonored check is the reversal of the 50 cedis. So why are we recording it on the debit side? Remember, when the business was issuing it, it was on the credit side. So when the check is being returned, it will come to the debit side. So that as both of them are the same cash book, 50 on the debit and 50 on the credit, when we subtract, it will give us 0. So 50 on the debit, which is 50 like this, minus 50 on the credit, it will mean 0. It means they've not paid the supplier. If the business doesn't record the dishonored check in the books of the business, it will appear as if the business has paid the 50 cedis to the supplier and they don't owe the supplier 50 cedis. So the supplier has to return the check. The business must record it to show that no money was paid. So 50 on the debit, which can also be like this dishonored check from supplier A. Dishonored check from supplier A. Which is what? 50 cedis. So this 50 here minus the 50 there will give us the 0, meaning the business is still owing the supplier. So this honored check is when it's from the supplier. The opposite side is the customer own, is the customer's dishonored check. Now the customer brings a check to the business will record it on the debit side. When the business takes the checks to the bank dishonors it for some reasons, and they return the check to the business and say that go and give the check back to who gave it to you. So they come back to the business takes back the check, and when it comes into its cash book, customer not forgetting that originally when the customer brought the check, they recorded it in their cash book. Now that they are returning the check, they also have to record it on the credit side to mean that the amount the customer claimed to pay, he hasn't paid because they couldn't cash it out. Are we okay? Are we okay?
Yes.
Yes, sir.
Hey, am I teaching? Okay. So this under check can be on the debit side, it can be on the credit side. That is what I wanted to explain. It depends on to whom the check is being returned. If the check is being returned to the business, it is on the debit side. That's dishonored from the supplier. If the check is being returned to the customer, then it's on the credit side, dishonored. So after all this, we will add up. When we add up, we can also have balance carried down here on the debit side. We can also have balance carried down on the credit side. Balance carried down on the credit side. Then we find a total. So the opposite sides. If balance carried down is on the debit side, which is the left side, the right hand side we can balance brought down. If balance carried down is on the right side, the credit side, the balance brought down will be on the left side, opposite side. Guys, are we good?
Yes, sir.
Yes, sir.
All right. So as I said, the adjusted cash book is used to correct errors or issues with the original cash book. Now, if there are issues with the bank statement, then the business will use what is called the bank, or the business will use the bank reconciliation statement. So the bank reconciliation statements. That's the BRS. So the BRS, we can have two columns. Ghana city here, Ghana city here. Then we'll say balance as per adjusted cash book. Balance as per adjusted cash book. So here, here, it's from here. The balance is coming from the debit side of the adjusted cash book, debit side. So I record my figure here. Then I will add unpresented checks. Unpresented add unpresented checks. So let's say that I have check 1, check 2. So check 1 figure is here, check 2 is here. Then I'll add wrong credit. I'll explain everything, don't worry. Wrong credit. When the business, because it's affecting the business, we record it under the unpresented checks. Then if there is any error, so I'll add all these XXX and I'll write the total here. Then it says I should add. So all these, I'll add and put a total here. Then I will add the figure here to this figure and I write a total down here. Do we get it?
Yes, sir.
Do we get it?
Yes, sir.
Yes, sir.
Then when I'm done, I'll come with what is called less uncredited checks. Uncredited checks. So that's, let's say check 4, check 5, right? So I write the figures here. Then if here is wrong credit, the opposite side will be what? Wrong debit. I'll come and write it here. Wrong debit. That is if the business mistakenly debited or deducted an amount of money from the business account. Meanwhile, it shouldn't have done so. We come and write it here. Wrong credit debit. Then we will add error. Also, there can be an error. I will explain what each of them means. So when I add all these also, I'll go and write on the credit, the left right-hand side. Then it says we should less. So all these, the total goes here, right? And then I will less the figure. I'll subtract it from the top figure, the red figure, which is the addition of the unpresented and the balance. And I'll write my final figure below here. My final figure below can be positive or it can be negative. And the name is called balance per bank statement. Balance per bank statement. So bank statement, ST, bank ST. So I'm going to explain each of them. So now pay attention. Immediately I finish this, then we'll solve question 7 and we'll close. I'll meet some other time and then we would solve other questions. So pay attention. Now, in exams, your books are not to balance. Just do the right entries, that's all. Okay, so watch. You see, let me teach you something before I go on to that. In accounting, we have something, you did it in school, you've done it anyway. It is called elements of the financial statements. Elements of the finance. I believe you guys, you are keeping your notes. You are recording.
Yes, sir.
Element of the financial statement, we'll go with the acronym ALICE. Pay attention. ALICE, A stands for assets, L stands for liability, I stands for income, C stands for capital, E stands for expenses. So when I construct and prepare a T account, here is called the title of the account. Title of the account, this is credit side, this is debit side. The ALICE, the first E and the last E, they are recorded on the debit side. And the middle three are recorded on the credit side. Now, the all assets, so we say that all assets have debit balances. All expenses have debit balances. All liabilities, they have credit balances. All income have credit balances. All capital have credit balances. So this is Alice. So I can record expenses or losses or costs on the debit side. I can record income, gains, profits on the credit side. I can record capital or equity on the credit side. So pay attention. I'm not coming in here. Whenever an item is on the debit side and I'm bringing more assets, let's say assets is on the debit side, I am bringing more assets to the debit side, I'll add them. Expenses is on the debit side. When I'm bringing more expenses, I have utility there, I have stationery, I'm bringing stationery, I'm bringing telephone expenses, I'm bringing transportation expenses, I am bringing salaries, I'm going to add them. Why? Because they are all on one side of the account, which is the debit side. Whenever there is a liability, let's say there's a loan, the business went for a loan of 10,000. The next day, the business went for another loan of 5,000. I'll add them because they are all going to the credit side. When it's an income, the business got an income of 5 cedis today. 2 days later, I got another income. I'll take all to the credit side and I'll add them. The business has a capital of 5 cedis or 100 cedis. Next 2 months, 2 months later, the owners also brought another capital of 5 cedis, 30 cedis. I'll add them. What are we learning here? Every item which is going to the same side where the Alice is, you add. So if it's going to the assets, add. If it's going to expenses, you add. If it's the same expenses, if the liability is going to liability, it's on the credit side, you add. But then, when they change position, let's say one asset moved from here, that is debit side, and it's going to the credit side, it will subtract. When expenses also leave the debit side and goes to credit side, it also subtract. When liability is on the credit side, move from credit to the debit, it will subtract. When income moves from credit to debit, it will to the debit side, it will subtract. When capital moves from the credit to the debit side, it will subtract. Do you understand it?
Yes, sir.
Yes, sir.
Do you understand it?
Yes, sir.
Yes, sir.
Now keep this in mind. Let's go back to the bank reconciliation statement. The balance per adjusted cash book. Which side did we pick the figure from? The balance per adjusted cash book. Which side of the adjusted cash book did we pick the balance from?
Debit.
The debit side. Have you all seen it? I use the arrow. Have you all seen it?
Yes.
Now watch. So here, this figure here is debit. This figure here is debit. Coming from a debit side. Now, unpresented checks means that the checks were given to the supplier, but the supplier didn't present the checks to the bank. So, if the business is paying the supplier, pay attention. If the business is paying the supplier and it gives check to the supplier to pay, and the supplier were to take the check to the bank, and the bank should give the money to the supplier, how would the bank treat the check in the books of the business, in the account of the business? Will the bank credit the business account or debit it to give the money to the supplier?
Debit.
Debit.
Any other person?
Debit, sir.
The bank will debit it. So what did I say earlier? Whenever debit goes to debit side, what happens there? They add up. Do you understand it? Do you remember what I said?
Yeah.
Yes.
Yes, sir.
Whenever debit goes to debit side, I use the Alice. I use the Alice here. Alice. Whenever debit goes to debit, you add. When you have assets and you are bringing more assets, you add. When you have expense, you are bringing more expenses to the debit side, you add. So we began with a debit entry. The balance per adjusted cash book was picked from the debit side. So unpresented checks means that they didn't send the checks to the bank. And I'm saying if they have sent the check to the bank, what would the bank have done to the check? The bank would have debited it. So here, unpresented checks are debited because we will assume they were sent to the bank. I guess, or if they will be sent to the bank, they will be debited. Do you understand it?
Yes, sir.
Okay, so I'm done with check 1 and check 2. Check 1 and check 2 are all what? Unpresented checks. They are all unpresented checks. I'm done. Now moving on to the next one, wrong credit, wrong CR. Wrong credit is saying that the bank mistakenly added money to the business account. Maybe the amount is for, yeah, but the name of the business is called Akos Enterprise. So instead, an Akosia were to pay money into a Akosia account, but the bank made a mistake and gave Akosia's account to Akos Enterprise account. It's a wrong credit. So if it's a wrong credit, how would the bank correct the wrong credit? How would the bank correct the wrong credit?
The bank will debit
The bank
the
will debit it. Yeah.
yes.
Because the bank has mistakenly credited, giving wrong money to Akosia, which has increased Akos Enterprises account. So if the bank, which is a wrong credit, because they don't have to credit that account, but they credited the business account, which is a wrong credit. So if the bank wants to correct it, they will have to deduct the money, take the money out of the account. Taking the money out of the account is called debiting. So you can see that unpresented checks will be corrected by debiting. Wrong credit will also be corrected by what? Debiting. And the
Mm.
error here, which is the last one, is also an error which will be corrected by debiting. So we've seen that all these transactions here, they will all be corrected by what? Debiting. And I said when the transactions are recorded on the same side, you add them. So because we have the balance as per adjusted cash book, which is on the debit side, we are adding all unpresented checks, wrong credit and error because they will all be corrected by debiting. So debiting of all those unpresented, wrong credit and error will be added to the debit balance of the cash book. That's why we are adding them. Do you understand it?
Yes, sir.
Yes, sir.
Okay. So I'm done with that side. Now, why are we crediting? Why are we subtracting uncredited? We are subtracting uncredited because, like I explained, if the credit leaves the credit side and goes to join the debit, it will subtract. So uncredited check means that the suppliers or customers paid the business with a check, and then the business didn't take the check or the checks to the bank. If the business were to take the checks to the bank, what would have happened how would the bank have treated the check in the books of the business? Would they debit or
No credit.
yeah? If a customer gives the business a check, means the customer is paying the business. If it's a check, the business has to take the check to the bank, and the bank will now credit the customer's account. Sorry, will credit the business account. So because the business hasn't taken the check to the bank has not credited the account. So we are saying that the issue here is that the checks are not credited because the business has the checks and they've not taken the checks to the bank. So if the business were to take the checks to the bank, what will happen to it? They will be credited. So uncredited checks are the checks which are yet to be credited or which have not been credited, but they will be credited. So how do we correct uncredited checks? They are corrected by crediting. Do you get it?
Yes, sir.
Yes.
Wrong debits. Wrong debits. They mistakenly deducted money from the business account. How do they correct it? How will the bank correct it?
No credit the
Yes,
account.
sir.
They will credit it. So what I'm trying to establish is that the less uncredited checks, all these less figures here, we are going to less uncredited checks. We are going to less uncredited checks. We are going to less wrong debits. We are going to less error. All these three, they are corrected by crediting. The unpresented checks, the wrong credits, the error, they are all corrected by debiting. The uncredited checks, the wrong debits, the error, they are all corrected by crediting. And I told you, whenever credit moves from where he is and goes to the debit side, he is going to subtract there. That is why we are lessening all of them. Because all the uncredited checks, wrong debit, or error, they are all about crediting. So if you are crediting and it's going to meet debit, remember the balance as per adjusted cash book is debit. The unpresented checks, wrong credit and error, they are all corrected by debiting. So if they are debit and debit, we add. But then the other people, the other part of it, they are all credits, credit, credit, credit. What do we do to credit when they meet debit? We subtract. That is why we are lesson. Are we okay?
Yes, sir.
Guys, are we all okay?
Yes, sir.
Yes, sir.
Okay. So those of you who are not in the study group, let me send you the link so that you can join and we'll see what to do. Sorry. Okay. So finish writing before I solve the question. Are you finished writing? Are you finished writing? Hey, I'm asking a question.
Yes, sir.
Do you have any questions before we solve the question?
No, please.
Okay, so those who are not in the group, you can join. I'm sending the link to the chat. All right. Okay, so now let's solve the question. So what if the balance is coming from credit? What if the balance is coming from the credit? Now there are two ways you can solve this question. Remember, when they are on the same side, what do? You add. If the balance is coming from the credit side, we will change this figure here. Now we are making it credit. Right? If the balance is coming from the credit side, we can maintain the same format, add unpresented, less, whatever. But then when it's coming from the credit side, you can put it in brackets. Do you understand it? We can put the credit side figure. When it was on the debit side, there was no brackets when we maintain the format. But then if it's coming from the credit side, we can put the figure in brackets. Why? Because the credit side is coming to meet the debits of add and add and add. Right? So the debit side, because the figure we are picking it from the debit side, credit side of the cash book. And if it's credit, whenever credit meets debit, what happens? One of them must be negative. So here the credit is rather negative, and then we have added the debit. Or, like I said, whenever credit meets debit, one of them must be negative. So here we are making the adjusted cash book credit side negative so that the debit will be positive, right? So then we'll still make it less. Why are we making it less? Because we've made unpresented checks positive by adding. So all the credited items will be negative. That is why if the balance is the balance by the adjusted cash book is on the credit side, or it's a credit balance, we can add unpresented checks and still less the uncredited, because all the credit items are negative and the unpresented is positive. That is one side. So that for this method, we will only make the balance for adjusted cash book negative. Then we'll maintain unpresented checks and less uncredited. That is correct. Or we can make the uncredited check positive and then bring the and then change here. Watch. Then put here less. If you make it positive, we'll make here less unpresented check, add uncredited. Because how do we correct the uncredited checks? By crediting. And the balance per the adjusted cash book is also crediting. So 2 credits are added. Then the debit one, which is the unpresented checks, they will be subtracted. Do we understand it?
Yes, sir.
Yes, sir.
Okay. So whichever way, you get the same results. Whichever way you use. But just stick to the one which you better do it. You get it. So that's it. This out of the way, let's go and solve question 7. Then I'll close. Next time I'll find time and we'll solve. Since I have sent some questions to the group, I'll find time and solve those questions. I'll share this on the YouTube channel and share the link. If you want to do any revision, you can. If you go and do your masters, you'll be learning the same thing. Now, there are types of questions under BRS. So let me talk about the types. There are types of questions under BRS. We have type 1, T1. T1 could be all notes. No, let's say T1 will be, you'll be given the cash book and the bank statement. We have a question like that. T2, type 2 question, you'll be given the cash book and notes. You'll be given the cash book and notes, meaning that they will not give you the bank statement like debit credit. They will write in red. They write as a paragraph for you. Type 3, you can be given the notes to the cash book. They will not give you the cash book, T account, and bank statement. Type 4, you can be given all notes. All notes means that they will not give you any T account for the cash book. Neither will they give you any T account for the bank statement, or they will not show you how the bank statement is. They will write everything in words, like the type 7. The question 7 is all notes. Everything is all notes. The other questions are, the question at the top, question 6 is also all notes. Right? It's also all notes. All notes is like this. They're giving words, paragraph by paragraph. Question 7 is also all notes. Right? That is how mostly they do it. But I'll solve a question which involves the type 1, which is a cash book and a bank statement. They'll give you cash book and bank statement, then you do it. You work on it. Then I also solve a question with you on cash book and notes and bank statements and all notes. So today we are solving this all notes. The question 6 is all notes, question 7 is all notes. And it's all notes they will bring to the exams. But you have to know how to solve the type 1 as well. Are we okay?
Yes, sir.
All right, so let's start. My time is running. Let me got the time. Ish. Okay, let's start. Okay, whenever you are asked to read, when you are starting the question, the first thing is find the name of the entity. The following information was extracted from the records of Mr. Amwa. So Mr. Amwa is a business, is a sole trader. Mr. Amwa, you write it at the top. Then after you find the name of the entity, you go to the requirements. You are required to, I'm working on question 7. You are required to prepare an adjusted cash book. Then you come. Adjusted cash book. Your Ghana city sign, your currency sign, That's it. And B, II, the bank reconciliation statement. You leave a space. They can all fit the same paper. They can fit the same question, market script. So you write here, they write in full. Bank reconciliation. Let me come down a bit. You write in full as well. Bank reconciliation statement. Write it in full. Bank reconciliation statement. Then you put your 2 Ghana cedi sign, just as we did. And write here balance per adjusted cash book. Balance per adjusted cash book. You write in full, okay? They are calling me for I have another class with some people. So they are calling me. Balance per adjusted cash book. You write it this way. Here, you don't write whether debit or credit. You've not yet finished it. Okay, so this is II. And the top is adjusted cash book. All right. Let's start. It says, the following information was extracted from the records of Mr. Amwa, a petty trader, as at the 1st December 2022. Balance as per bank statement as at the 1st December 2022 was 40,000 credits. So it was 40,000 credits. The cash book balance was 80,000 credits. So you see here that you've been told what the cash book balance is. That's original cash book balance was what? 80,000 credits. Original cash book balance was 80,000 credits. Right? So the original cash book balance was 80,000 credits. So you come here in your statement and write balance brought forward was what? 80,000. So it was on the credit side.
Yes.
The following had been reflected in the bank statement, but not in the cash book. So pay attention. The following had been reflected. The following had been reflected in the bank statement, but not in the cash book. So here, where is the error?
In the cash book.
Cash book. So what do we use to correct the cash book?
Adjusted cash book.
Adjusted cash book.
Adjusted cash book. So now, standing order. It says it's already in the bank statement. So standing order, where do you think it should be? On which side? Debit or credit side?
Credit.
It should be on standing. So I'm using SO for standing order. Standing order. 6,400. Bank charges.
Credit.
So BC. 14,000. Dividends from investments.
Debit.
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 So dividends. Dividends. 40,000. Interest from treasury bill.
Debit.
Debit.
Yeah, it's an investment. So interest T-bill. 16,000. Bank loan interest.
Debit.
Debit.
Hey,
Debit.
bank loan interest. You are owing, you are paying an interest on your bank loan.
Credit.
Credit. Credit.
Credit.
So loan interest. 11,600. Is that all?
No.
It says, in addition, a check of 80,000 issued to Antiesta was dishonored because of insufficient funds. So who is Antiesta?
A customer.
The customer.
In addition, a check of 80,000 issued to Antiesta was dishonored because of insufficient funds. So who is Antiesta to the business?
A supplier.
Supplier. So where would the standard? So this is the standard check, right?
Debit.
The standard check will be on the debit side, right?
Yes, sir.
Yes, sir.
The business receives check from customers, but it gives out check to suppliers. Let's hope it balances. So 80,000. Okay. A check of 72,000 from Stephen has not been credited by the bank. What name is that check?
Uncredited check.
Uncredited.
Credited check. This question is very easy. Okay, so let's do it quickly. So we go. Let's see whether I can find a unpresented check. The bank has wrongly debited Mr. Amwa's account to 28,000. Okay. So this is what you can do. Let me show you something. Okay, now let me come here. You see that this 80,000, right? Are you good?
Yes, sir.
Yes.
The cash book issues end here, isn't it?
Yes, sir.
They start from here, they end here. So let us finish with that. Let's finish with adjusted cash book. So we come here. It ends here. So let's finish with it. So we are closing it off. Let me leave a line here. Let me leave a line here. A space, sorry. On both sides, which one has the highest value?
The credit
Deb-
side.
The credit side.
Debit side.
So someone should add the total. Someone should add the total debit for us.
Debit.
136,000.
So you have to write it somewhere, like on your question paper, 136 somewhere. Then the credit side, is it 116? 117?
The 112,000.
Oh, 112. Okay, so 112. So the higher is the 136. So we write it here. 136,000. The same here. 136,000. Then we'll ask ourselves, the debit side, the credit side, which was not up to the 136, which was the 112, right? So let's subtract it from the 136. How much is left?
24,000.
So we write it here as 24,000. It means that when we add all these, which is the 112 to the 24, we will have 136,000. Is that correct?
Yes.
Yes.
24,000 is called balance carried down.
Carry down.
Then the opposite side, we will have balance
Brought down.
down. At what amount? The same 24,000. So now we've seen that our balance brought down is on the debit side. So we will come to the balance per adjusted cash book.
Sir,
Then, come again?
how do you get the 24,000, please?
Who can explain it to him for us?
So,
Okay, hold on. Okay, speak.
all right. So you would subtract the
136.
6,400. You would add 6,400, 14,000, 11,600. Then you subtract the figure you get from the 80,000. That's the balance carry forward.
No, hold on.
I'm confused.
You add, hold on.
When
You add all 80,000, 6,400, 14,000, 11,600. When you add all this, you're going to have 112,000.
112.
And the aim is we have to get to 136 because the credit side is the total, is the higher. So this 136 minus 112, what figure are we going to have? What
24,000.
24,000.
What?
24,000.
24,000. So this is 24,000. This is 24,000.
Okay.
When you add the 24 to the 112, you're going to have the 136.
I get you. Thank you.
Yeah, so you always look out for the shortfall. The shortfall is 24,000. In other words, we need 24,000 more to add to the 112 to make 136,000. Okay, so because we got our balance carried down on the credit side, the right side, the opposite side below the total is our balance brought down. And that balance brought down begins the BRS. And in the BRS, we know that we can go by the old format. We can say add what? Unpresented check. So let's say we can get unpresented checks here. So in addition, a check of 80,000, we have dealt with it. A check of 22,000 from Stephen has not been credited by the bank. That's an uncredited check. The bank has wrongly debited Mr. Amoy's account 28,000. Let's hold on. A check of 196,000 issued to Samuel remained unpresented. So what is the unpresented check figure?
196,000.
I'll write it here. 106,000.
196,000.
Then I'll ask myself, pay attention. I'll ask myself, this issue here, the bank has wrongly debited. So what is the name of this entry? What is the name? Wrong what? The bank has wrongly debited. So wrong what? Hey,
Wrong
look at
debit.
the form. Wrong debit. So to know where you place the wrong debit, you ask yourself, if it's a wrong debit, how does the business correct it? How will the bank correct it? So wait, hold
Yeah.
on. If it's a wrong debit, is it affecting the cash book, adjusted cash book? Is it affecting the cash book or the bank statement? Who made the error?
The bank.
The
So
bank.
if it is the bank, where are we going to correct it?
The bank statement.
The bank
In,
statement.
no. We are going to correct it in the bank reconciliation statement.
Yes.
Yes,
Because
sir.
we use the bank reconciliation statement to correct the bank statement. So who made the wrong debit? It was the bank. Therefore, why are you going to correct it? In the BRS. So if there was a wrong debit, they wrongly debited Mr. Amoy's account, what should be the correct thing to do? How should it be? Should it be corrected?
Credit.
Wrong debit means they wrongly deducted. So debit, deduct. So wrong
So
debit
credit
means
his account.
they wrongly deducted Mr. Amoy's account. So how should they correct it?
They'll credit his account.
So if they
Your
have to
credit
credit the account, where do we record it in the statement?
adjusted cash.
Should it,
Mm.
Bema, where should it be? If it's a wrong debit, where should it be recorded in the bank statement? Should it be added to the unpresented checks or should it be added to the uncredited checks?
Uncredited checks.
So why is it uncredited checks? I told you the way the error should be corrected will tell you where they should be. It's a wrong debit. If it's a wrong
Yes.
debit, how should it be corrected? By credit. So you add it
Crediting.
to uncredited checks. Because uncredited checks, how should we correct them? By crediting. We correct them. Are you getting it?
Yes, sir. I'm getting it.
So it means unpresented checks is only one. How should we correct unpresented checks? By debiting. How should we correct wrong debits? By crediting. So they are not the
Crediting.
same. We can't add them together. Are you good?
Yes, sir.
So
Yes,
because
sir.
this 1,000 is the only unpresented check, right? I would repeat that same figure here as what? 196,000. And I'll add. When I add, what do I have? When I add 24,000 to 196, what do I have? The 120,000. Is that 120,000? Hey, is it 120,000? 220, is it 220,000? Sorry.
220,000.
Okay, so that's it. That's it. Then what do we do next? Less
On
credited checks. Another name sometimes they give to uncredited check is called check lodgement. Check lodgement. So if you see check lodgement, the same as uncredited checks. So it says a check of 72,000 from Steven has not been credited. So uncredited check 72,000. I'll record it here. Then the wrong debit. Wrong debit. So DR is debit. How much was it? 28,000.
28,000.
So just ask yourself, if there's an error, how should they correct it? In the bank statement, how should they correct it? If the error, it is two ways. It's either they debit it or credit it. That's just the only two ways. So if there's an error, there's the error. How should they correct it? They will correct it by crediting. Then we go and add it to those crediting items. It's an uncredited check. How do they correct it? By crediting. So you add all credits together. I told you, if they are happening on one side, if they are on the credit side, they are all added. If it's on the debit side, they are all added. That is why here we are adding the balance per adjusted cash book to the unpresented because they are all debit entries. So what do we have here? Yes, 72,000 plus 28,000. Is it 100,000?
100,000.
And we are lessing because this one is credit. So we are lessing this figure. You put in a bracket. So what are we going to have?
120,000.
120,000.
120,000.
I may have made a mistake somewhere. We have to get 40,000, right? So let me check where the error is coming from. We have to get this figure. You have to get this figure. I getting it. We have to get 40,000. That should be the balance. So let me see where the error is coming from. Hold on.
Hello.
Hold on.
Hello.
A moment. All right. So let's continue. So now, the way the wordings were placed, right? Because it says here, so it means that probably that a check issued to Auntie Esther was dishonored because of insufficient funds. Okay, so it means that the dishonored check will be on the credit side because that is when it will balance. Otherwise, we could have said the dishonored check should be recorded on the debit side. You might find some questions where dishonored checks can be on the debit side. But here, though we treated it that way, it didn't balance. But you have to figure out how to balance. And for it to balance, the dishonored check must be on the credit side. Are we okay?
Yes, sir.
Yes, sir.
All right. Let's go on. So we are going to have here dishonored check. Dishonored check, which is what? 80,000. So since there are more entries on the credit side and the credit side is more than the debit side, we'll close it off here. So when I draw this line, I'll come and draw that horizontal line also there, and close it off. So what is the total on the credit side? What is the total on the credit side?
196,000.
Okay, 196,000. You're going to have 196,000. When we finish, I'll show you another technique. So what's the difference? 56 and 196. What's the difference? Yes. Is it 146?
So 140. That's
140.
140.
So balance. I'm not using a calculator. I'm using my head. So you have to give me the right figures. Then we come in as balance brought down. Balance brought down 140,000. So if that becomes a figure, then we come here. It's on the credit side. So the balance adjusted cash book 140,000, right? 140,000 right here. 140,000. Then it's negative. So if you want to maintain the same format, it's on the credit side. So you're going to make it negative. Minus 196. What do we have?
56,000.
Okay. Sorry. So we're going to have here as the 56,000 positive. 56,000 positive. Then we will have our final figure to be negative 40,000. Negative 40,000, which shows it's also called credits or overdraft. So it should be, you put it in negative. Then we would say that balance per bank statement. Balance per bank statement. Very good. So always it must be the same as the balance in the question. Balance as per the bank as at the first example was 40,000 credits. 40,000 credit means it's 40,000 overdrafts, OD. So the final answer should be this, negative. And with the one we got, we were getting 120,000 and it was positive. So it means it was wrong. And it means that we have to go and adjust this 80,000. From while they wrote it, they issued the check to Auntie Esther, and from the explanation, Auntie Esther, it should be on the credit side. Auntie Esther would take the check. It was this, and so you have to bring it back. So it has to go to the debit side. But if you place on the debit side, we are not going to get our 40,000. However, placing it on the credit side, it would give us the 40,000. So that is the correct entry. So it might be that probably the way they wrote it was wrong. Like let's say in the business, right? Maybe the way they wrote it was wrong. But placing it on the credit side will give us the answer, which is the correct one. Another thing else we should take note is this. When we are doing the BRS, maybe in exams pressure, we don't have the time. Whatever you do, if the question, like in this question, for example, where the question says the credit balance, the bank statement balance should be 40,000. Even and the example of the first one, where we got our credit balance, our bank statement to be 120,000, right? And we compared to this and it was 40,000. We knew it was wrong. In exams, even if you go by the approach, how we did it in the exams, how we did it initially, and you go by that same approach, your final answer, though you got 40,000 in exams, don't write the what. Though we got 120,000 in exams, don't write 120,000. Write the balance you see there. Do you understand what I'm trying to say?
Yes, sir.
Yes, sir.
The first one we solved. Maybe you are in haste. So the entries, you didn't post them well. And the question is giving you the bank statement balance to be 40,000 credit. If you add all, you add unpresented, you less uncredited. When your final answer will not even give you the 40,000, write the 40,000 the question gave you as the bank statement balance as your balance per bank statement. Are you getting it?
Yes, sir.
Because the question is saying your final answer should be 40,000. But when you add, you're not getting the 40,000. So just put your 40,000 there and it goes with a mark. So if this bank statement is 10 marks, in the question, they don't mark final answers. What they do is they mark all your steps. So your T account, they will give you marks for your T account. They will give you marks for the currency sign. They will give you marks for some of the entries you got, right? So let's say each of them is 1, or half. But your final answer, if you're able to get the final answer of 40,000, your final, the final mark will be, let's say, 1 mark or 2 marks for just writing 40,000. And you went to write the 120,000, which was not the correct figure. You lose 2 marks only for the last answer. Because the question has already given you 40,000 that this is what you should arrive at. So even if you solve and you don't arrive at the the 40,000, but rather like you got 120,000 and you add and you still get a 120,000, your final answer must not be different from what the question has given you as the balance per the bank statement. I hope I'm making sense.
Yes, sir.
Okay, so that is one of the issues about the BRS. Sometimes the way they will place the narration. Another example is you may have a question where they will say that the question will be like the person presented a check of 50 cedis or 500 cedis. The bank recorded it as 600 cedis. I get it. The person took a check of 500, but the bank recorded it as 600. So here you could say there's an error. The bank made an error. Here we don't say in BRS, the bank doesn't make a mistake. So you would treat the 600 as the correct amount, and rather the amount the customer presented or the supplier presented as wrong. That's one thing about BRS also. The supplier or the customer presented or the business presented a check of 500 cedis to be credited, or a supplier presented a check of 500 cedis to be credited. At the end of the period, the bank rather debited the account with 600 cedis, not 500. So here you say that man made a mistake. In a BRS, the bank doesn't make mistakes. It's rather the customer or supplier can make a mistake. So you rather say that it was an error from the what's the name? From the supplier or the person who presented the check. Because the bank will not make a mistake. That's what BRS says. Okay. So sometimes the narration could be very, very confusing. Just as this one, the last paragraph, it was in the ordinary sense, the standard check should be on debit. But if you place on the debit, you're not going to arrive at the 40,000. You rather place on the credit side and you would arrive at the 40,000. Are we okay?
Yes, sir.
All right.
Yes, sir.
So we'll end our class here. Practice it. The one the other student pasted in the group. And these are all notes. Okay. Indicating clear the cash book balances. Prepare the bank. Okay. So the first one is also a similar one. The first one is also a similar one. All right. Any questions?
Sir,
Okay.
I would like
Yes.
to ask, in recording the under the BRS, how would you know whether it's an overstatement or an error?
Can you do what?
How would you identify if it's an overstatement or an error?
In the BRS.
Yes.
So like I said, the customer or the business presented a check of 500 cedis to be credited. When the business took the check of 500 cedis, the bank rather credited it as 600. So in this case, you could say there's an error because the business presented 500 The business presented 500. So why did the bank credit it at 600? The business presented 500, but the bank credited it at 600. So you could say that the error is emerging from the bank because the bank made a mistake. Instead of 500, they made it 600. And I'm saying that in such a case, the bank doesn't make mistake. It's rather the person who presented the check, the bearer of the check, they made a mistake. So that's how you treat in BRS. Also, if there's an error in the what's the name in the bank statement, we use the BRS to correct it. And another error could be like I said, let's say you presented a check of 500 to be credited to your account. Then they rather went to credit someone's account with the 500. Here, they didn't credit your account with the 500, which you presented as a check. They rather credited another person's whose account name is similar to yours with the 500. Are you getting it? So here's an error. It's an error.
Okay.
So here, the error,
So
it is
that
not
one, sir,
wrong.
is that an error of omission or?
Yeah. Let's say it's an error of omission. Okay. So here you presented a check of 500 cedis to be credited to your account, but then the bank didn't credit your account. They rather credited it to another account bearing similar name. So assuming you are James, right? Or let's say Akos. You are Akos Enterprise. That's your business. Akos Enterprise. And there's another enterprise which is also called Akosia Enterprise. So you present a check of 500. Instead of giving it to your Akos Enterprise, they gave the 500 to Akosia Enterprise. So here there is an error. They didn't wrongly debited your account like what we just read. They didn't wrongly debited your account. Neither did they wrongly credit your account. They didn't wrongly debit your account. Neither did they wrongly debit your account. So in your case, there was no wrong debit. There was no wrong credit.
So, sir, please, in this case, can we say that that's an unintentional mistake?
Yeah. It's an unintentional, but let's say it's an error. So you see when we prepare the format, I wrote error under the unpresented and the uncredited, right?
Yeah.
Yes, sir.
Watch it. She was asking the types of error which can occur. So look at this one. You see, I wrote error here. And here too, I wrote an error here. Right? So there can be an error under the adding and the lesson. The adding the unpresented and lesson the uncredited. But in all of them, how to solve them, how do you correct the error will tell you whether you have to bring it to, you are going to add it to uncredited checks or you are going to add it to unpresented checks. So this is an example. You present your business name is called Akosia Enterprise. That's the account name with the bank. Then you submitted or presented a check of 500 cedis to be credited to your Akos Enterprise. That is your business. Then the teller over there or cashier mistakenly credited it to Akosia Enterprise. Meanwhile, your business name is Akos Enterprise. So here, though there is an error by the bank, but in your account, there was no wrong credit, meaning they didn't add any money to your account wrongly. Neither did they take any money from your account. Do you understand it?
Yes.
But then your money to recredit your account, they rather credited it to someone's account. So in your books as a coach enterprise, how do you treat it? So the how you treat it is just the same way I was trying to say. You ask yourself, how should that error be corrected? So how should the error be corrected? In your books, in Akosia's books with the bank, with a bank account or in Akosia's bank account with the bank, how should the bank correct the error that Akosia has presented 500 to a business account and they rather give it to Akosia Enterprise? So how should the bank correct that error in Akosia's enterprise account? How should it be corrected? Are
They'll
they to
They'll
credit.
debit?
credit her. They'll credit
They'll credit
Akos.
So you
Akos.
see, this error we are talking about, it's not about wrong debit. Wrong debit is when it affects your business account. Wrong credit is when it affects your business account. But here, nothing of that sort happened to Akos Enterprise. Rather, they gave Akos's money to another company. So the error is that is the error. How do they correct it? They have to credit it. So if they have to credit it, you have to send this money in the BRS. You have to go and put it under the uncredited checks, because that's how we correct that, and that side is how we correct anything which was not credited. You just credit it. So that's the error I wrote there.
All
Are you
right.
getting it?
Yes.
Yeah.
So that is one of the errors. So whenever you study, that's what and also I'm saying that sometimes the narration, the way they write it, you have to think it very deeply and you have to try. Are you getting it? You have to try to see maybe this side should be, this side should go before it can balance. So whenever there's an error, that is an example of such an error. It doesn't affect the business in any way. It's rather affects another account, but then it is related to that business account. So how do you correct it? That is just how you ask yourself, how do I correct this error? Should I debit the account? Yes. I get it. If you debit the account means that you take it to unpresented checks. How should they be corrected by the bank? Should they credit it? Yes, they take it to less uncredited. Because in the BRS, the adjustments are the add unpresented checks, wrong credit and error, and less uncredited checks, wrong debit and error. Those are the adjustments you make. So whatever error happen in the bank account, the main concern is, am I going to credit or debit it? That's all. If you are going to credit it, you can take it to, what's the name? The bank, the unpresented. If you are going to credit it, take it to the uncredited. Are you getting it? So that's
Yeah.
how they. So for example, this one also, this example also, you took 500 to the bank. The bank credited it at 600. Who made the error?
The
So this
bank.
is the and this is the bank. So you took 500 to the bank. The bank entered it at 600. Who made the error?
The bank.
Good. And I'm saying that in BRS, the bank doesn't make errors. It's rather the bank. It's rather the business. Are you getting it? Ah,
Yes.
not the
Yes.
business. So the BRS, whenever you read that, the customer took a check to the bank and the bank credited a different amount, the bank's own is correct. So what you have to do is you have to make the adjustment on the. So here it is going to affect the cash book. I get it because in the cash book they're written as 500, but in the bank statement it's 600, the same check amount, but in the bank statement it's 600. In the cash book it's 500. So you have to go to the cash book and also record 100 cities there. Are you getting it?
Yes, sir.
Yes, sir.
So if the bank states that it is the bank entered 400, are you good?
Yes,
Yes,
sir.
sir.
The bank entered 400. Who made the error?
The bank.
Bema, I'm saying the bank doesn't make errors. It's the business.
So the business made the error.
Always, if you have that entry, the business did this, the bank did that. Mostly. In BRS, the assumption is that the bank doesn't make error when it's entering figures. It's rather because it could be that you wrote 500 and they will call the business owner. They will call the business owner and say, oh, the 500 you wrote, the balance on your account is 400, not 500. And the business owner will tell the bank, maybe the business owner is a prime owner, is a prime customer of the bank, a premium customer of the bank. Can tell the bank, okay, if it's 500, you make it give if it's the balance in the account is 400, you give 400 to the bearer of the check, right? So that when he brings the money, because it's an emergency, so when he brings the money, I'll later sign the check for 400 and present it to the bank. Have you seen it?
Yes,
Yeah.
sir.
So the bank will not make a mistake. So it could be 500, but let's say the balance in the account is 400, and they'll contact the owner that, oh, and this owner might be a premium account holder. They'll be like, your account is 400, so 500 is not sufficient. Then they'll be like, okay, release the amount to the bearer of the check. I'll later pass by the bank and give you the check of 400 and retrieve the 500. And they'll be like, and the bank will accept it, right? So though it's 500, the bank has given 400, so the bank is rather right. Very good. And here too, you can say that the error might be with you can say the error might be with a check which is debiting. So how should a bank correct this error? They rather debited accounts with 400, not 500. So this error will go to unpresented checks because they're debiting. Are you getting it?
Yes.
Yes, sir.
That's how it is. So these are some of the errors which can be captured around that area. But in most of your questions, you may not find such. I'll bring a question like that and we'll solve it. You see how it is. I'll bring a question like that where there was a mistransaction, and then let me see. Hold on. Hold on. Hold on, let me see. Look at this. Look at this question. Look at this. Look, read here. Look at it. This. A check for 23,000 received from a customer paid into the bank had been dishonored. So here, which side would you enter the dishonored check?
Unpresented.
Hey, madam. A check for 23 received from a customer and paid into the bank had been dishonored. So which
Uncredited.
side?
Right?
No.
Debit.
Unpresented.
No. Listen. A check for 23,400 received from a customer and paid into the bank had been dishonored. It's a dishonored check.
Oh,
Paid into the bank means they took it to the bank, but it was dishonored. It's a dishonored check. Are you getting it?
yeah.
So it's a dishonored check. It's a dishonored check. Where do you record it? On the debit or credit side of the cash book? Or just a cash
Debit.
book? Where?
Debit.
Debit.
Oh no.
Customer
Credit.
credit side.
Look
Credit.
at just the check was received. So how will it be recorded if it was received from the customer? In the cash book, how will it be recorded? Debit or credit
Debit.
side? Debit.
Debit.
Then they took it
Yeah.
to the bank. The bank says the bank dishonored, the bank didn't receive the check, the bank didn't accept the check. So if the bank didn't accept the check, they'll give it back to the business. So if the business is giving back the check to the customer, where would they record it?
Credit.
Credit.
So this dishonored check, have you seen this one is straightforward? It's on the credit side.
Yes, sir.
Now compare it to the previous one we just did. You see that one was not straightforward.
Yes, sir.
Do you remember that the one we just did?
Yeah.
Yes, sir.
Have you seen that the statement, the narration was not straightforward?
Yes, sir.
That's what we are trying to say. So sometimes the narration, which could be a problem, and that is. So I said this one here too. I said a check lodgement always talks about what? Uncredited checks, right? Check lodgement means uncredited checks. Now look at the next bullet point. This bullet point. This why I came here. Yeah. Read it. Who can read it?
The bank had entered a withdrawal of 59,500 cedis as 69,500 cedis.
Have you seen it?
Yes, sir.
So yeah, who made a mistake?
The business.
Business. So the business presented withdrawal like a check of 59,500, but the bank recorded it as 69,500. So you
Yeah.
could say that as the bank, yeah. So if you treat it as the bank, if you treat it as the bank has made the error, it will not balance. You will not obtain the bank state. You not get this figure. If you treat it as the business, the bank rather made an error, you will not obtain that closing balance, the credit balance, or the balance in the bank statement. But if you treat it as the business made the error, then you would see that it will reflect the exact figure. So here, the issue has to do with the bank statement. So the error is in the bank statement. This one also here, I'm using blue. This one also here, the issue has to do with the bank statement. So you have to correct it in the BRS. because all the issues are with the bank statements there. So you have to correct it. It's the same as we are doing here. The one in this question. The bank had entered a withdrawal of 59. I'll drop it in the group so that you all practice it. But this one, it involves some double entry. I mean, some errors, correction of errors. Maybe I'll show with you some other time. The bank had entered a withdrawal of 59,500 at 69,500. The bank's figure is rather correct. The business figure is rather wrong. But the error occurred in the bank statement. So you correct it in the bank statement. And it's an error, right? So how did the bank correct it? The bank increased it. So you take the figure. If the bank increased the 59,500, it means that it credited it. It added more to the 59,500. So the error is a credit item. So you go and add it to the less credit and credited checks. Are we okay?
Yes, sir.
Yeah. So that's it.
Yes,
I'll drop it in
sir.
the group. Then you try answering. Okay. So you've ended that class. All right. So have a good night.
Thank you, sir.